Despite of all the promises about tax cuts and making life affordable for us, all the governments, whether this is federal or provincial, they will always give you false hope that we are going to cut taxes going forward. We are going to remove this carbon tax and that tax and that tax. But the reality is it's not going to happen. And even if they remove a particular tax, they will replace it with something else and call it a different name. And I'll give you the examples. So recently I was going through some of the articles and I saw this study from Fraser Institute, and according to them, the Ontario government has increased the provincial taxes very quietly since 2017-2018. So according to this chart, your average provincial tax on an annualized basis was somewhere close to $1,736 back in 2017-2018. Now that has gone up to $9,406. This is provincial annual tax, inflation adjusted. Okay, in percentage terms, it used to be 12% of the GDP back in 2017-2018. Now it is 13.4% of the GDP. So the taxes are going up, guys. Okay, it's not going to come down. And I tell you why it's not going to come down. Look at the BC government budget deficit. Okay, so they recently published that they are going through a massive debt balloon. Okay, back in 2022, 2023, they had a surplus of $3.3 billion. In 2023, 2024, that surplus turned into a deficit of $3.6 billion. And now in 2024, 2025, the deficit has gone up to $9 billion. So what does it tell you? It tells you the governments, whether this is provincial government or federal government, they don't have the money. They are broke. They are literally broke. They have so much spending to cover. They must increase taxes. They cannot afford to cut taxes because otherwise that deficit is going to further balloon. Okay, there are only two ways for government to collect money. Number one, taxes, and number two is borrowing. Okay, the deficit that you saw on the charts right now, it is being covered through borrowing. Where do they borrow from? They borrow from the public. They borrow from the treasury market by selling bonds. Okay, and that determines the interest rate on the bonds using the yields in the bond market. So if they continue to finance that deficit by issuing new bonds, that deficit is going to continue to grow because they have to pay interest on that spending as well. So over the long run, that spending is not going to contract because the GDP is not growing. The only way to reduce that deficit is to grow GDP. And the GDP needs working age population, which is why they have been importing people from all over the place, because they need working age people to work so that they can grow the GDP, collect more taxes, be able to finance their expenses. But as of now, it looks like they're not able to do that, even though with the higher immigration. So the only way for them to sustain is to keep increasing taxes. Even if they promise you in the election that they are going to remove the tax, they will replace it with something else. So either way, they increase taxes or they borrow money, which is printing money, which is going to dilute your purchasing power through inflation. You're going to lose anyway. So what do? How do we protect our purchasing power? The only answer is investing. As a new immigrant to Canada, one of the biggest shocks is how much of your income goes to taxes. Nearly 45% for the average family. That's why using tax-free investment account like TFSA is crucial. A TFSA lets you grow your investment tax-free. And with Moomoo, you get lower trading fees and access to professional research tools. So you're not just investing, you are investing smartly. And here's the best part. Moomoo's Cash Plus gives you 6% annual interest on uninvested cash. So even when you're not investing, you're still making money. So if you are new to Canada and want to grow your wealth the smart way, Moomoo is a great place to start. And if you sign up today, you will receive a $2,000 commission card. Plus, deposit $100 and get $50 in stock cash coupons with up to 50% cash back. If you deposit $2,000, you will receive $150 in stock cash coupons. Don't miss out on these incredible opportunities. Start your investing journey with Moomoo today. invest wisely, invest into high growth assets that can beat this inflation. So even if the inflation is hovering over 2%, that means you're guaranteed to lose 2% of your purchasing power every year. And that cannot stay 2%. If they continue to print money by borrowing, that inflation is continue to go up. 2.5, 3%. Maybe it will not go to 9% like what we had in pandemic, but it will continue to hover around 2, 3, 2.5%. That means you're guaranteed to lose 2 to 3% every year of your purchasing power. So you must invest in a way that you beat that inflation, that monetary inflation. So identify the assets that are going to give you the return that can beat this inflation. Even if you just break even, you're not going anywhere. You're just standing there. In order to grow, you have to beat that inflation rate. 3%, 4%, 5%, 6%, 7%, 10%. There are some asset classes which can produce that level of return. Of course, there are some risks associated with that. You have to weigh the risk and the reward, and then be able to find a place where you can invest your capital to grow and beat this inflation. That's the only way out for us, guys. The taxes are not going down. The government is broke. They're going to continue raising taxes, borrowing money, which will continue to print money, raise inflation, and our purchasing power is going to continue erode. The only way is to invest and beat this inflation by investing into assets like growth stocks, Bitcoin. Yes, it is down right now, but it can come back. This is the only asset class which is not controlled by any entity, and nobody can print it. Consider for your portfolio. I'm not saying go all in. At least 10%, 20%. Keep your 10%, 20% of your worth into Bitcoin and keep DCA. DCA is your friend. If you have a strong conviction on any asset class, keep DCA it. Over the long run, this will pay you off, and you can thank me later. Anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up, subscribe, and I will see you in my next video. Are you feeling lost in the complexity of global economy and trying to understand how this is going to impact your investment portfolio? You are not alone, my friend. I have been through and I have learned the hard way, and I'm trying to converge all of my experience and learnings into a course that I just designed specifically for you. In this course, Mastering Macroeconomic Fundamentals for Investment Strategies, I'll show you how to decode the economic trends, navigate market cycles, and build smarter, adaptable investment strategies. You're going to learn, analyze key indicators like GDP, inflation, and yield curves, identify opportunities in commodities and crypto alike, and adjust your portfolio to thrive in any cycle. With real-world examples and actionable insight, this course will empower you to invest with confidence, no matter what the market is. Don't just react to the news. Understand them. Enroll now and take control of your financial future today.